Good morning, everyone. Today is Thursday, March the 2nd. My name is Anne-Marie Band, and this is the Moneyball Morning Report for the Benzinga Pro platform. We just had jobless claims come out. The numbers were not terrible. Again, these are estimates that people trade on. But what the big number I think folks are responding to is the doubling of labor cost overall. And so what are we doing? In the pre-market, we bounced at this 39.47. Remember, that's the low of last week. Traders came right in and began to sell off right on that spot. Pretty amazing to watch that happen. And it's come back in, and we've just made a new low and, now bouncing off of that. Well, no, we actually made the low at about 3 a.m. And we'll see if we're going to try and hold a higher low. Right now, as with all the days we've had in the past for the last few weeks, every bounce is a sell zone. This formation is continually telling us that risk is being priced into the market. Something else that's changing is the forward curve of interest rates. A lot more bond traders are starting to say, maybe they aren't going to have to reverse rates. And this is what's going to happen. They are thinking to themselves, well, they said they weren't, so maybe they aren't. And so that is shifting. And when that shifts, the markets will come in. That also means that we're going to see the dollar continue to bounce. The Bank of England has said, hey, listen, I don't think we can raise rates anymore. But we are continually moving down this process. Here's the very interesting storyboard. If you go backwards in time, and lead lag, Michael Gayed, put this out, in the spaces where the Fed has raised rates, most of the time, the stock market continued to go up. So what's happened here is that we are repricing assets, and those repricing of assets are just going to bring the market down because the cost of creation and getting things to market are going to become more expensive, and that means forward guidance is going to come down, blah, 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 blah. Our thoughts as tactical traders is we're in this fade where risk is being recalculated, so the bounces are still sell zones. Listen, could we see a massive bounce as people try to crowd in to the short and the chart reverses? Yes, that's what happens in bearish markets. And so what we have to do is say, hey, listen, if I get above 39.47 today, buyers are going to get more excited about bringing us back into 39.65. All right? And so that really is what we are looking at. Can we get up and over that level as long as we stay below 39.4750? All the bounces will be sell zones. If we begin to hold this level, it says traders have recovered part of this position. Sorry about all the noise. I've got the sliding glass doors open. And so what we have is this upward process that could force the sellers out of the market and bring buyers back into the market. Very interestingly, I'm seeing cumulative delta readings that are extremely positive. So I want you to be super careful going short at the lows. That's just not something we want to do. Let's take a look at the NQs. The NQs were moving fairly nicely until, NVIDIA decided to give up some of its gains, which it should. It's moving way too far too fast. I believe a lot of these things are sort of pricing in the reopening of China, and I don't even know how that's going to go, right? Because we are deglobalizing and not re-globalizing, and so that's going to take some looking to. My suspicion is that the Qs are in the same kind of formation, just pulling back into the deeper support. Bounces are going to be sell zones. The number to watch is this line in the sand, and that number is 11,917. Let's take a look at SPY. SPY is down at 392. My thought is that we're on our way to 390. We do see some heavy congestion here, so you are going to see buyers trying to buy the dip right at around that 393-ish area. Currently, we sit beneath it. You can see that we tried to bounce first, but they are selling off. What's the line in the sand here? It's really a little bit squishier because we have this gap that's going to be forming. And that means if we get above the 393 area, there could be a push all the way to 394.75 before the charts rotate over. Again, bounces are sell zones. Taking a look finally at the cues. What do we have here? Same, we're down here at 88. Now, 88 is somewhere around this congestion level. Now notice, there's nothing definitive here. People move back and forth around this area, okay? So what we want to think about is, if they drop through, realize that very nearby, they're going to try and create a bounce event. If you do this, the quick, tight trade that comes into the area and begins to lift, you got to get out, because the bounces could be quite extreme. As you can see, we've had candlesticks that are moving fairly rapidly and widely, even though we don't see volatility shifting in the broad motion of the VIX. We do see that it's a little bit on the rise, okay? Don't buy volatility until it gets above 40, honestly, because every single time it's just crashed to the floorboards. No one's making any money buying vol right now. They are still selling it. That being said, always looking for the outside risk, folks. In this kind of environment, my go-to is I'm going to trade smaller size, and I'm going to trade less often so that I can see directionally what we have going on. At the end of the day, what we are looking at is trading formations that are going to give us bounces that we can sell. Stay frosty.